Hello, hello. Give me a sec. I'm gonna get started. I should start with this first. Hello, useless. Hello, hello. Good evening, good morning. Give me a sec. I'm gonna get situated. Hello, Gene. Hello, hello. Let's wait a couple of minutes so people can join in. Don't worry, all of this will be edited out. Grab a beer, grab whatever. Right. Mm. Give me a second. Am I seeing the live chat? I hope I do. All right. All right. Hello, Oyun. Hello, hello. I'm probably slaughtering that. Pardon me. Hello, everybody. Let's wait a second so more people can join in. And we'll get started. Wait, I need to. Hello, Arnon. Ah, hello, Amri. Hello, hello, hello. All right, now I know. Now I know who's who. Yeah. All right, I think we're not gonna wait any longer. Although, you know what? Give me a sec, guys. If you can bear with me just for a second longer, I'm gonna do another thing here. Oh, that was not planned. I'm gonna do one more thing if I can, if you guys can bear with me. Come on. YouTube not cooperate. Come on, YouTube. All right. Is YouTube cooperate? Come on. Guys, I'm so sorry it's taking so long. The YouTube not cooperating right now for some reason. Come on, YouTube. All right. Got that done. Got that done. Got that done. All right. Naps are good. Naps are good. Naps can be very good. I agree. Welcome to Gap Closing Day. Nah, I don't know. I don't know. We will see in a second. All right. I think we have enough people here to get started. So let me do exactly that. Right. So can we see the screen? We should be able to see the screen. Everything should be fine. Good. Let's go. All right. So far, just like some of my latest videos, this should be titled "I Told You So." So yeah, this video is done. Smash the like, subscribe, ring the bell, and that's it. We're done with the video. No, I'm kidding. Hello, Johnny. So I said earlier what's gonna happen basically earlier is what we've had here with the S&P, this gap closure and all this. happened due to what we had with Microsoft open up a gap. As I've expected the gap to be closed during the pre-market hours. The gap closed, the market pulled back up. That was why I said the other day on the video that I'm gonna make the bulls happier, because essentially, but those who watch the entire video know that in essence it spoke about how the market will correct down, and this is more so of a breather in between sort of the process of depreciating right now, to be more simple about that. Then we had Apple, Amazon. By the way, Apple right now is the only thing that is actually kind of holding the market up. The Apple is up today, so that's one of the things why the S&P is not actually looking even worse than what it is and pulling upwards somewhat. I mean, you can see on the chart. Remember, here we're not about opinions, we're just about looking at the charts, looking about analysis. In my videos, I'll be giving my own opinions, and in the community, in the Discord, and all that. Here we're going to be just looking at the technicals and what is there. Another thing that is holding the market down is Amazon, although they had a what we would consider an okayish report. All in all, the projections are not really that bad, but still the market is doing what it's doing, as you can tell. At the end of the day, you can see the small caps that today are suffering tremendously. Doesn't matter which sector you're going to look at right now. Again, if it's Tesla that I've projected, it's going to make its way to 200. We actually broke today that very strong level, as you can tell, the 213.15. It's a very strong level. It's a level that we've tested many times on our way up and down, and I've projected originally that this year is going to be very volatile, high highs, low lows. In fact, even I'm surprised how high we got on certain assets. And those of you who are not familiar and don't know, I'm very not bearish. I'm in fact very bullish. I'm just always looking at what I see, and just I try to be objective, present things as they are and talk about what we see rather than what we want to see. Oftentimes what we want to see, I would say, sort of places a fog between us and reality. So Tesla is on its way to 202.98. Let's call it 203. Okay, in other words, it's the same 200 level. 200 is psychological simply, so you can see the whole area. All of this is like a very wide minefield. When I say all of this, I mean 200 and 2.98, call it 93. 200 itself being a very strong psychological level. Those who are more familiar with the golden pocket and the smaller sort of variations and whatnot, right now we're going to have also 196.57. In other words, wait, let me check the chat. At least I hope this time I'm sharing the screen. I'm sharing the screen. Okay, mind the gap. Check. Going at work. Finally, I can actually join these lives. Welcome Johnny. As I said, Alex, hi Alex, smash the like. Thank you, Alex. Arnon, or just smash Greg. Don't smash Greg. Greg doesn't do bad things. Why are you like that? Why are you so evil, sir? Can you show the liquidity on Tesla? No, not right now. We're gonna focus right now. I want to focus. If you wanna check, you can check and put it in the chat real quick. I really want to continue with what I'm showing. I'm assuming it's probably decreasing all in all, if we're looking at on medium, but on average, so to speak. Yes, can share. All right, Dennis. Thank you. No, let's focus on what's important. Again, I really wanna go get this done before people really need to run away. So let's focus on what's important. If you can check the volume today on Tesla and share it, I'll appreciate that. So with regards to the S&P, which we know is a main driver of everything, and we're going to start as we did on the previous lives on the smaller time frames, and of course expand outwards so we can understand what it is that we're actually looking at. So on the smaller time frame, as you can see, we got a gap open right above our head right now. Momentum potentially shows that we're going to move a little bit upwards, but again, remember, 1 minute, it means that this can change and will change several times over every several minutes. In other words, this is not indicative of anything. It's probably indicative of the next several minutes. Also, you immediately can tell there is a wider trend, something of a process, if you will, that we've been going on, and it's a longer term one, meaning we will go through this process for a longer duration as well. So far it's being retained very well. We have a smaller channel inside, smaller trend, okay, to keep it simple. And as you can see, we're already starting to revert. Those who are familiar, again, golden pocket, we are currently testing major levels. So no, those who are familiar, it's not a big surprise that even after we broke and we had more downwards momentum, which I gotta say, when this gap, for example, opened up, just for those who are not familiar, it leaves people such as myself still kind of in hesitation. Why? Because it takes a while before the price action gets far enough until we can say, well, the gap is not going to get closed anytime soon, right? Simply for the reason that it will have to go through a more of a process to actually do that. And when when momentum is running out, right now we can actually see it live going on. We can see the momentum sort of breaking down as we went through this temporary short-term channels. Is more relevant to the 1 minute, right? What we're seeing on the extended sort of on the outer view, right? If to zoom out and to actually pay attention to what really is going on, as I've said, what you can see, the price action is being retained within this longer duration channel. Okay, now let's expand so we can try and understand what's really is going on. So as I said, even though this temporarily bullish, it's very temporary, doesn't matter all in all. Now let's expand. Let's go to 5 minutes. Remove that nonsense because it's in the way. This nonsense. What we can tell here really is on the 5 minutes. Well, what happened first of all is, again, a longer duration channel and a shorter duration channel, right? So that same channel that appeared as a longer duration now appears as the shorter duration. What you can tell here is very simple. Same idea. I've said this and explained this before. Those are not familiar. Stochastic RSI. Right now, our bearish momentum is dominant. That orange line, once it's on top, okay, every time the orange line is on top, as you can tell, the market is going downwards. Okay, so right now we are again at the top. The engine is too hot, so to speak, and it needs to go into a cooling off period. That cooling off period results, when we're looking at the actual price action, with more downwards movement. Okay, so as we've tested this level, as you can see, this is a process of testing, which is very normal, especially past the fact that we've gone through this level sort of smoothly. Inevitably we have to retrace back, retest it, only to continue downwards. So again, a cool off period, we go up in order to go down. That's kind of naturally how the market works. Now that's the 5 minute chart. Let's see, screen sharing. Go on all the SML, I'm assuming. No, it's not. It's you're asking about ETF, small cap ETF, and sure. Thank you much. Just we're gonna get to it right now. As I said, we wanna. If I understand the question right now, it's kind of hidden from me behind an icon. I will see exactly if I'm reading it correctly. But right now we want to focus on this. Then we're gonna look at the comparison to the small caps, which I have here, the IWM. We're gonna compare and understand exactly what's going on. But all in all, I've done this in yesterday's live. What you need to know is what often can happen is that the IWM, being a bit of a lagger behind the major indices, what will happen is that you'll have the major indices flipping over, which I literally said in the last couple of lives and videos that I'm expecting the IWM to start catching up, in essence. And what happens, what you see over a shorter, sort of this shorter period of time, is it seems as if the IWM is contradicting the major indices and it's running upwards. What's in reality is going on, it's going towards a conversion with the major indices, okay? With the S&P and the Nasdaq, to be more sort of simple. And when that happens, usually we will see the IWM revert and continue with the same direction that the S&P and the Nasdaq are going, which right now, as we know, is downward. So finally that catch-up moment happened, and now we're starting to see the small caps reverting downwards as well. More so, right now we're seeing live how this bottom support is being tested. In essence, you can tell right here, right, this sort of this entire entanglement the same way a line, a rope would get entangled within itself, right? If you're just gonna, it gets bunched up. Notice that it gets bunched up. The price action, the movement is less smooth around these supports and resistances. The stronger the support or the stronger the resistance, the more time potentially we're gonna be testing it back and forth until we successfully break out or get rejected. Okay, now so 5 minutes. Right now we're still on a move down. As you can see, once we do reach these bottom or highs, we can spend some time in these overbought, oversold territories, which implies amplification of the effect. So if we're selling, we're going to get selling even faster during our process within this level, below the 20. Okay, just to kind of keep it simple and understood. So we're moving towards it. Let's continue to the 30 minutes. What does the 30 minutes say? Well, again, we see contradiction here. So the 30 minutes says, well, Greg, good for you, right? In all reality, right now we're moving upwards, and we're going to be able to validate and verify that, because remember, we're moving gradually to higher time frames. For example, from the 30 minutes, we can project up to a couple of hours outwards. So right now, being several hours away from market close, we can say that probably there is a potential from extrapolating from the 30-minute chart, looking at this, we might spend some time correcting upwards, right? There are various levels. We know this level that we just looked at, that 5347 and 5336 levels, okay? These levels potentially are going to be levels we're going to retrace, retest them several times over. As I said, this is too smooth, very abnormal. Retest, and then potentially break down or break up. We will see, right? To be determined by the higher time frames. So let's continue. 45 minutes. 45 minutes amplifies what we see on 30 minutes, being very similar with a slight difference. Basically, here we can see that correction or rally, if you will, hasn't started yet. So there is probability to extrapolate from the 45 minutes, if we're going to see something similar in the 1 hour chart, that Monday is going to look nice, right? Unless we don't have trading on Monday and something I forgot or something like that. But yeah, you get the idea, get the drift. Let's continue. Let's remove that junk. Continue. 1 hour chart. 1 hour chart, same thing. Amplifies. You see on the 1 hour chart, slowly we're becoming bullish right here. That means there is likelihood and potential of actually closing the gap. So Arnon, there you go. You wanted to know about the gap. From this sheer movement, okay, upwards, the amount of time it allows us to extrapolate, that means potentially we're going to be seeing the entire next session spent moving upwards, right? And that's not even including our process inside of the overbought territory, which again amplifies the buying process. In other words, just from this, we can extrapolate, hey, well, we can potentially either correct all the way right to here, to 53.90. And remember, everything that you're saying that I'm talking about in the indices, right, can and will be translated to your own individual assets. Meaning, if the indices, the major indices, are going to be running upwards, rallying, being bullish, you're going to see a correction on your individual assets. So from this, potentially either close the entire gap. We might be able to see the gap is you'll see how I marked it up with these. I think those are the blue lines, if I'm not mistaken. I marked it up. So potentially we can see a closure of this gap from this timeline. So again, I'm going to make the bulls potentially happy next week, letting them know that they're going to have more of a bullish session, and they will be able to relax a little bit, to each their own, whatever their choices with their portfolios. Again, this is not financial advice. It's just what I see, my own meandering sort of thoughts on the technical analysis on what the charts are showing us, right? I didn't miss anything. I'm late. Gonna rewind. Watch 15 speed. Hey Casey, what's up? Am I not already speaking in 1.5 speed? No, that's not the case. By the way, ladies and gents, I apologize if I start if I get into the zone and I start rushing. I'm gonna try and stop here and there and look at the chat and make sure that I'm speaking slowly so everybody can grasp everything I'm saying. I really am making an effort. So please, guys and girls, cut me some slack. I really am trying. Okay, let's continue. So here we're starting to have again a contradiction, which is, by the way, more scary, because once we get out of this 1 hour range, the 4 hour implies to us far longer processes, right? So by the way, part of the pain that we've been seeing in the last couple of days, you can already see it being translated through in this behavior, right? We can already see a convergence of the forces, the bearish and the bullish momentum, if you will, and the orange line represents the bearish momentum, and we are just getting started. Just let's pretend 4 hours, which in essence represents a single trading session, right? Not including the pre and post market. In other words, just a couple of these outwards on this projection will give us several sessions, right? So if what we saw on the 1 hour potentially will give us what, an hour's one session correction. So let's say a Monday, right? Maybe a Monday and a Tuesday, but overall what that shows that we're going to continue the rest of that week, whatever it will be, right, with a bearish momentum continuing this movement, which, by the way, every time you see that the larger time frame contradicts the movement on the smaller time frames, it gets mitigated. In other words, if this is going to be bullish and the smaller time frames are bearish, they are going to be barely bearish. That's just kind of how it works. To really put in really simple terms, those who are interested, again, join our Discord, join the community. We have there all, honestly, at this rate, moving very rapidly towards 15,000 people, which is, in my opinion, complete insanity. It's an awesome resource of a lot of knowledge, a lot of people, a lot of topics. It's fun. There's always somebody there, almost 24/7. Not a joke at this point. It's like 24/7 discussions about all topics, so highly recommended. There I expand and talk about how these sort of processes work and affect one another. But to put it in simple terms, the larger the time frame, the more important it is. It doesn't matter whether you're a trader, an investor, however you classify yourself. Wink, wink, just a secret. This is more or less jargon that we use to convey ideas to one another in the industry quicker, right? So you guys really abuse it and misuse it and just going all wrong about it. A trader is not better than an investor or vice versa. And your definition of one or the other are not exactly the way we define it, but it doesn't matter. Okay, that's not the point being. This is important for everyone, because even an investor, like it or not, most of the time is aware of what's going on in the market. Investor or not, still right now is aware that the market is dropping and probably having the emotional side effects, right? The fear, the buying, the FOMO buying, all of it, you just name it, right? So, and we know emotions should be removed from the table, so to speak, when we're dealing with the market. Why? Because the emotions often sort of get you to, well, they make you to make, they simply force you to make mistakes. That just, let's put in simple terms, they make you make mistakes. So let's continue. Let's continue. A 1 day time frame, again, a contradiction. So all in all, right now what we're seeing is more positive than negative. The 1 day chart actually emphasizes how we potentially can spend, again, that sort of same week. How is it that they contradict one another so much so? Because this chart and the day chart work differently. The day chart actually involves more often than not within these wicks, basically within the singular candlestick, both the pre and post market, and what you end up having here is a different structure of the chart, hence the trend looks differently, and the data for the momentum indicator will be adjusted according to the data that it sees. So in fact, I would actually take the day a lot more seriously in this instance when you see that most time frames are in agreement, and you have, let's say you have 5 of them, even the smaller ones in agreement, but 4 hours this sort of in disagreement. I would take the side of the majority of the time frames that are in agreement. Okay, that's kind of the more correct way to go about this, to put in simple terms. But still, why is the title, and why am I saying that this is only the beginning and pain only, this is just the beginning, and a lot more pain to come? Why? First of all, more so because we have another gap above us that everybody forgot, and it doesn't seem like we have anywhere near close enough momentum, even within all these time frames, to even anywhere get near it. At the best case scenario, we're going to spend most of it, because we have contradiction on the time frames. In essence, it's like something that mitigates our momentum, okay, or goes against. Hey, Midwest, man, good to see you. I'm so happy to see you here on the live. Now that makes me so happy. Okay, so let's continue. So in other words, all in all, we don't have enough momentum to already fix the problems we have left behind. And if you're looking at the overall trend that is starting to be generated here, most of you already started to notice. Of course, we can argue that this, for example, is a deviation, or there are various ways. Of course, we could recognize later that this is actually the top, the median is somewhere here in between. We will sort of look at how this trend is going to be structured later down the line when it's going to pan out a little bit more, and we're going to be more certain of its limitations, if you will. It's support, median, and resistance. My pleasure, buddy. Alrighty, so weekly, right? Let us go weekly. Again, here is a contradiction. This is oftentimes when you see technical analysts. Some, of course, people who are less experienced have analysis paralysis because they see a lot of contradiction on their own charts, and they know that most often they're not, depending on their abilities, that their tools work rather well and correct. Then how can it be? So they basically end up being confused by their own tools. Now, I will tell you that the way to to approach this, as I said in the beginning, the larger the time frame, the larger you can extrapolate that the movement will take. As we said, for example, from the daily we can extrapolate that potentially we're going to spend a week, right? But from the weekly chart, we can extrapolate it. Pardon me. We potentially going to be able to predict based upon our momentum gauge, right? A movement of several weeks, potentially, if we're doing it right. In this instance, we're going to have several candlesticks. Every single one is a week, okay, week time. In other words, we're going to have several weeks of still moving downwards. So all in all, if you combine the entire equation of what we've seen so far, yes, we're going to have some force to correct partially part of this candlestick, right, which is going to be closed literally 3 hours from now, because this week is going to be closed, said and done. Whatever is going to happen within the next 3 hours from now will be determined. Just kind of, we have these 3 hours. A lot of things can change. It can be locked halfway through. Maybe the bulls will outbuy the bears significantly so, and will be literally 50% of what it is. But I'm gonna say that the signs are not that positive. Why? You see, this entire candlestick was actually that big, right? Because it involves the pre and post market. If you can tell, where it started at around 55, 6400 area, and then now it's 5327. All right, so quite a, and in fact it was as low as 5303 during this week, right? So quite a significant fall. This is a significant acceleration of the downwards momentum, and this is quite a strong signal that this momentum is going to be retained at least for a while. Okay, so far so good. I hope I'm clear. Must have different on the same time. He's to be Midwest. I don't know. I imagine him. He's like an octopus sitting with like several computers or something, or he's secretly, it's like his secret user of some other streamer and already has like a gigantic setup, because yeah, Midwest is just everywhere. An absolute legend. He's always coming in and supporting, showing respect and love, very always respectful to the community. An absolute legend. Yeah, so that's that. That is the weekly. Let's go monthly. Monthly, this is where the real problem is. This is why I keep telling you guys and girls, ladies and gents, that this is only the beginning, right? Because I keep telling you, if you look at this candlestick, which still has 28 days, right? This is the first one in a row since we've transitioned from the upwards momentum into this downwards momentum, which I'm not going to be surprised if we're going to stop, particularly at that golden pocket, right? It's a very technical, strong level. Again, the levels are 53.47, 53.36. Those are very, this is a strong channel, if you will, right? It's a strong zone, the entirety of it, so it can hold us up temporarily. So, but what you can see here is the same thing that we saw on the smaller time frames, but amplified, longer duration, right? And we're already starting to see right here that convergence of the bearish momentum over the bullish momentum. In other words, the bearish momentum seems like it's going to overtake any moment, And why is that? Because we're not seeing the minutia that already is happening on smaller time frames, which we know what it is. It's this. It's all that negativity. Part of that negativity coming through that bullish momentum breaking down. Okay, you can see how that direction, how the direction of this was upwards, meaning being amplified, even getting stronger. Right here, we're going for that convergence of the forces, right? And if again they can actually diverge and the bullish will remain on top, right? We're going to look at the 3 months, understand what the quarter seems to be like, because we again, remember, the larger the time frame, the more you can extrapolate the time of the movement. Okay, so we were going to see sort of what this is hinting at, and can we see a stronger hint of the same thing, right, on the larger time frame. Let's look at the 3 months, and here we're going to see something a bit different. But here I'm going to say, because these waves, because of the duration of these processes are so long, you are not yet seeing, you kind of starting to see a hint of convergence of these forces. And as you can tell on these time frames, this tool doesn't exactly work the same way it works on smaller time frames, simply going up and down. Very often it has these sort of transitionary processes, and you can almost recognize a trend within the tool itself, right? It kind of shows that although we had these impulses, still all in all, we're right about to converge here. It's the same way we've done here and went down. And whenever we actually reach oversold territory below 20, of course, the effect gets amplified, as we said, and we're going to feel more of a severe effect for a longer duration. Remember, this is quarters. This, in essence, amplifies that we're going to feel several quarters if this will converge, as we're seeing on the smaller time frames, and we're going to see the bearish momentum, meaning the orange line, become dominant on top, and the blue recessive. In other words, what we're going to see is several quarters of downwards movement. What is several quarters? You do the math. Okay, it can vary. Right now I'm basically trying to look over a mountain, determining sort of that, but I can tell you that we are already gonna get to a river, if you will. Okay, it seems at this moment, this process that we're making slowly, we're moving downwards. But then you're gonna say, well, Greg, you said let's look at all the other time frames just to be sure. Again, because maybe the half year will completely contradict what you just said, and in other words, this is only a transitionary period within the larger time frame. Well, I'm sorry to disappoint. It's the same thing. The entire big impulse that you've seen on the previous time frame is basically part of this, and you're seeing this on a far smaller time frame. In other words, we're seeing the same thing, the same process of breaking down, and this entire wave was represented by this. All right, now how do I know? Because if we look at the largest time frame that we see, the most important one that dictates probably the longest duration processes that we can extrapolate out of is the 12 months, basically the yearly chart. Let me just clean all that stuff up. You can clearly see what's going on here. Okay, we've been through this entire wave that you guys recently enjoyed, that some here know I've been able to predict from here, from the bottom of you know, the unpleasant event, right? That bottom, I was able to predict it pretty well for various reasons. For example, you can see the natural channel actually went there, and all sorts of things. There were various forces, as I've said, that when the price action on the larger time frame is being stopped by something, that something is not individually stopping the time frame, the price action. It is because it's being amplified significantly so by several other forces in the same price range. Well, that's what actually makes the price stop at wherever it is. Those who know, been in the community since then, I was actually able to predict this bottom 2 months in advance when everybody were very, very, very bearish. So those of you who think I'm bearish, right here, I was very bullish, was very vocal about it. Everybody were saying I'm crazy, because the human conditioning is, if the market is going down, then it's gonna go down. If the market is going up, then it's gonna go up. No, that's not how it works. In fact, it's kind of contradictory to what it actually does. You can join again the Discord, the community, ask our admins and moderators. They're definitely been around. You can become a full-fledged member. You can literally find messages from then on Discord, because the Discord was already active back then. In fact, it was very, very active, and we were all posting and talking about it. Although actually I'm not sure if we have that archived, but you can try and see. I definitely have my videos still up, those from that same period of time, and I was projecting these things openly, so that's not a secret. So all in all, what you can see, that why am I saying this is only the beginning, ladies and gents? You can see those who are able to stay around and listen to all my ramblings and understand where it was all going. The reason the title and the thumbnail of this video is "This is only the beginning," because it is. In fact, the entire effect of what you're seeing so far, as unpleasant as it seems, it's only the beginning. Okay, understand that this is appearing right here on the 1 yearly chart. In other words, yes, here somewhere here I said we're going to be moving sideways for a long time. We went 3 years sideways. This 1 year so far was an exception. We still have 4 months. Ladies and gents, let me tell you that I'm certain that the market absolutely certainly can, in fact I'll prove to you in a second, can retrace all the way inwards inside that channel, and it's going to be the 4th year technically that we, in a point of perception, remain moving sideways. And to prove that it can go that deeply down, notice how sometimes the market can correct. The market actually, this entire candlestick went this low. It went as low, if you remember, the area of, in fact, let's be precise about this, it was 3,491.58, right? Corrected all the way here just to remain with this. Given a little bit more time, we all know it would have corrected, in fact, all the way to 39.66. So you see, given enough time, the market can correct a lot of these movements. And once it does, then we're literally going to seem, at least on the yearly chart, as if we've been moving sideways. Okay? So all in all, again, remember, I said high highs, low lows. Low lows, high highs. It just kind of went the other way around. Okay? Still, though, we are moving sideways, what it seems, and this sideways is going to be very unpleasant, if you ask my opinion, for a very long time. And it has to do with a lot with the economy, with the geopolitical conditions. But here, I'm not here to discuss my opinions. I'm just here to share with you what the technicals are showing. Okay, that's what the lives are for. Market overviews are going to be about technicals. My videos, I will be sharing my opinions and price targets and so forth. Here, I'm mostly sharing what you guys can see. Ladies and gents, now that I've finalized my long rant, let's do some Q&A. I'm going to try and answer your questions. So let's go. I'm sorry that I'm not going to read the questions out loud. I don't read as smoothly and as quickly as I do silently. So that's that. You have to deal with that for the time being. I try to sometimes. Well, it's not, well, it's a very actually expanding time. First of all, hi, first time I see you here, welcome. It's a very good question. Well, it is actually rather rudimentary, but people are often swayed by their emotions and the contradictions, because a lot of the time the RSI will continue showing the persistent trend, right? And people will get sort of hyper focused on what they're seeing day to day. That's actually something I've mentioned in the videos quite often, and that's the problem. People basically get blindsided by what's going on. Imagine, to give you a really dumb analogy, if I may, let's pretend I'm a dumbass. Let's say you're driving on a winding road uphill, right? And it's very foggy around you. You can see the lights of your destination uphill, but again, it's a winding road. If you're not going to be focusing on your several meters ahead of you, you're going to fly off the cliff. Also, if you don't know your destination, you're probably not going to get to your destination. You're going to miss the turn and get God knows where. Just to, pardon my French, as I said, a dumbest analogy. Useless. Why are you guys so insisting? No, I'm not gonna bother with that. Why? What's going on? Why do you want to know the liquidity on Tesla? I don't know. Arnold, can you please post it? Everybody's dying to know the liquidity on Tesla. I don't know why that's so important. I don't look at volume this way. You need to understand that the indicators at the end of the day are a translation of the liquidity. In essence, by the way, what you are seeing here is the liquidity around particular positions, right? This thing, this tool. around certain price levels, so you can see where the levels are basically stronger, where the trading is more attracted to. Unsurprisingly, so this is the level that we've tested right here, and then you have the level that is being tested right here. Unsurprisingly, so I have supports and resistances on them. I'm not sure what's going on with the liquidity, guys. Why are you freaking out about the liquidity? What's going on? Arnold, what's going on? What is the liquidity? How much money we have in Tesla today? What is going on, sir? Everybody wants to know. Um, Liquidity, if you don't really understand how to use it properly, it's useless. It's like, I don't know, like having a submarine up in the sky. Volume is used in context. If you don't understand the context, it's just a number. More so if you use a proper momentum indicator, which in essence already takes in count the liquidity that the volume of the market on the particular asset that you're looking at. There's a reason why I remove the volume from the bottom. It's just nonsense, literally. I mean, it's not nonsense, but all in all, it doesn't matter as much as you guys think. Any questions? Anything else before I go? All in all, you need to understand that Tesla is not going to thrive if the environment is going to be very painful. If the S&P and the rest of the major indices are going to be moving down, as I'm predicting, right? Tesla is not going to have a good day. That's how the market works. You're not going to be able to see, if it's a tsunami, everybody's going to get wet. So that's that. Here we are. Yeah, we are correcting so far, as I've expected. All this time I was talking, we can see we spent some time testing some levels here, but all in all, those are intraday, unimportant. We can kind of see them here. If I'm going to hold my mouse, we can recognize there's some form of a weak support or resistance here, probably going to be broken soon. Then we're going to be moving to 52.99 right here. You can see it on the screen, the 50% retracement on the move. Okay, like that. And well, according to the time frame and how much time we have left, we can actually, according to what I've seen, and you guys need to understand another, by the way, expanding, there's another thing that people often don't do, is the context of which time frame works into another time frame. The trends there, I make it seem easy. It's far more complex, and also I speak with confidence because I have far more complicated and advanced tools that it will take me hours to explain. This is why, by the way, those who are not familiar, I have a one-on-one course that I teach, technical analysis, hopefully bringing you to the ability to analyze things the same way I do. If tomorrow I drop dead, you can do it on your own. I still have, by the way, free several spots. You need to ask me about them on the Discord, in a DM. Then we're gonna have a call. I'll break it all down. By the way, those who are not familiar, this is the Discord. It's pretty cool. It's almost like this virtual clubhouse. Don't forget, if you're not familiar and you're new here, it's very important. Don't forget to confirm the rules. Otherwise, you'll be stuck in limbo like the rest of these people, because they're literally seeing just one channel. They're not seeing none of the stuff you guys see on my screen. They're stuck with one channel that gives them absolutely nothing other than the rules. So it's important to confirm the rules, ladies and gents. Otherwise, you're in limbo. Again, we have the town square. You can talk about anything. You can show off your successful trades, which is something that we really like to see. Options, crypto, commodities, Tesla individually, Palantir individually. We have our memes, of course. Every self-respecting Discord must have one of these. Some philosophy, psychology, drunk chat, of course, when we just kind of hang out. Threads channel for news and such. So it's very organized, very clean. And a great resource. All in all, it's a great resource. Of course, we have the private part and the academies, Tom's Value Academy. a tremendous resource. Guys, this is like buying a Lambo for 10 bucks. A brand new Lambo for 10 bucks. That's what it is. Why? Because the value Tom gives in his academy is enormous. Go check out his Patreon. I think he didn't lock it still because he's in vacation and doesn't do these sort of things when I tell him to. And you still have the $100 tier and the $35 tier, which are identical. The 35, once you get it, you're locked in, and once he remembers to do what I told him, of course you'll be able to still own it and be grandfathered in, to be a veteran, if you will. What else? What's important? Academy, nonsense, community. I've covered everything. Like, smash, subscribe. Do all the great stuff. Questions? I was at questions. I remember. Sorry, I gotta go back to questions. I got carried away. No, the reason news or rumors why Apple is holding up the market, or is it just good earnings? I don't. Well, I'm assuming that's okay. Honestly, look, I can the part of the market overviews video. Okay, the overview videos that I'm gonna make. The intention is to focus on the technicals, show you what I see, try to use the most rudimentary basic tools so you guys can sort of try and apply similar tools yourselves, recognize these things, right? So I'm not really gonna share in the my speculations or none of that stuff. I'm gonna do these in the videos. Here I'm merely showing you the technicals and what I see. Again, if you're looking at Apple all in all, guess what? On the weekly it already started. Actually, I remember, if I remember correctly, no daily. Well, no, yeah, it sort of turns around on the weekly, which in essence shows the same thing. A little bit of a correction or a little bit of a relief post these two candlesticks, which is normal, a little bit of a correction, but all in all, it's downwards for a longer period of time. In a longer period of time, we can do more than we can do in several days. You understand? So that's why it's a lot more negative than positive. In my opinion, it's going to break back into this channel. You can see this ceiling right here that previously the market was testing and was really struggling with. Of course, it's probably going to test it on the top right here somehow, test it several times, and there will be the argument of no. Of course, it will be smart to ask me what I think when we get there, not right now, because things can change like traffic. But my perception is that we're going to continue, at least create this sort of, it seems to me like some form of head and shoulders. That's what I'm saying right now. Again, it's not going to be this picture perfect potentially. That's kind of what I'm seeing right now. Okay, so this can change. But for now, this confirms the head. Here we go, all good. Once we have here, that once we finish this, we're going to have a shoulder or some form of it at least. And then finishing it off by going down again. In other words, down altogether. And if the market will start breaking down earlier than this formation will be made, it's not going to say, guys, wait for me, I'm going to finish my head and shoulders first and join you then. No, then the market will literally look a lot uglier. Or uglier. It can, that still is a head and shoulders. Whether you like it or not, that is, technically speaking, still allowed. It's normal. So sorry. Why is nobody posting Tesla's liquidity for today? Come on, guys. People here are panicking. We need Tesla's liquidity. Wait. Oh shit, I missed it. I'm so sorry, brother. I am so sorry. Greg, can you share your prediction on upcoming months depending on recession and rate cuts? Oh wow, again, that's the thing I prefer to make in a video or talk about in Discord. Emre, please join me on Discord. Join me on The Voice. I hang out there with the gang, if you will, with everybody, with the community quite a bit. I'll be able to share that in depth because it's a bit of a convoluted topic. There are so many forces that are going to be affecting the market in the upcoming months, especially the closer we get to election, the more the geopolitical tensions become unstable. There's so much going on right now that even I'm not certain. This is why, by the way, for those people who are not familiar, I oftentimes rely on technicals and what they're showing, because we can see hints through the technicals of what's going to happen, and then we can kind of speculate of what's going to be the fundamental event that's going to cause what we're already seeing, right? Because what a lot of people don't realize that the institutions position themselves far in advance. It is just to those who can recognize the repositioning in advance, right? To make their own sort of decision making. And oftentimes, what I will do is I'm going to rely on the technicals I see, even though the fundamentals contradicting at the time. The same way I did during the very unpleasant period. And trust me, guys, back then, people were saying I was insane, literally. And it's not the first time. I've been working in the industry for a long time. I'm at the 15, 14, somewhere year mark. I'm not even counting anymore. Past the 10, I just stopped. I've worked at various companies, various positions, from junior to senior. Again, I learned to rely on the technicals. This is why I do what I do here. But it's up to you to decide what to do with your portfolios, because you're all adults. This is a big boy, big girl business sort of thing, and nobody's going to manage your money better than you will manage your own money. Makes sense, right? I mean, think about it. And that's it. That's it, ladies and gents. That was my other rant. Recession and rate cuts. Yeah. Well, it's hard to say. It seems like I don't think they're gonna cut it September. Okay, if you really want that one from me, Emery, I don't think they're gonna cut on September. Right now, I think that will be a very devastating blow. That could be potentially, you see, part of the event that we're seeing here is that the market makers recognize that the Fed will not cut, and the market will take that very severely. Okay. That's kind of where we stand with that. What a marathon. Damn. I think I was able to run through quite a bit here. Microsoft, by the way, is moving downwards, kind of moving. So as I was originally projecting, so yeah, it will correct. But all in all, it's on a downwards trajectory. If you just look in the 5 minutes, remember, don't get misled by what you see temporarily. Focus on what you see on the long run. Okay, if that makes sense to you guys. What else do we have? What is interesting? Lemonade. Wow, Lemonade actually went. I said Lemonade will go through a bit of a movement upwards, but then a significant correction downwards. Lemonade surprised, I gotta say. Lemonade completely blew it out of the water. Went basically to that. Pardon me. Apologies to that 25. Let's call it 25. It doesn't matter. It's 25.06. Let's call it 25 area. And in essence just lost completely all momentum and started breaking down, probably with overarching conditions that didn't even allow it to test this. Or maybe, to be more precise, since I see this correction with the candlestick, it's far more correct to assess that the channel was the force that stopped it from continuing, and then once it's lost momentum, just dropped back down. All right, Emery, thumbs up. All right, I hope that got you happy, man. That means I potentially ended up answering somewhat of what you wanted to know about. Yeah, this is mild crash. I think could be bigger if the middle class start to hold the money. Look, I don't even think the middle class really have money. That's a lot of. I mean, look. A lot of people saying that they think the middle class have more money. I think the middle class, in fact, is basically non-existent at this point. They were reduced to the lower class in some form or way. If you really want to go down that path, because these people are struggling. These are the same people who went into the whole lockdown days event, with savings, and right now and now they're actually, some of them, it's a known fact, it's actually, I've seen many articles about this, how a lot of them are buying basically food in credit and in buy now pay later services, which that is not indication. That means they're trying to stretch every single dollar, right? That means it's that bad. We know that if you look at the jobs market right now, right, if you look at the job sector, you're going to realize that actually what we are generating are temporary jobs, not full-time jobs. Temporary jobs that are being taken over, at the three times the rate that full-time jobs, is very indicative of a recession. Though this is usually things we see prior to a recession. Why? Because people are doing so bad, they are forced to take a second and a third job to make ends meet. So the only place where they actually have money is in the stock market. And when they see the stock market drop like this, what do you think they're going to do? Those who still have enough profits will start running away. Of course, there is the assumption that money market funds will start, the money that the liquidity that was in money market funds will start moving into stocks. But this is a misconception and it's very complex, but I'm going to try and explain it quickly. A lot of the money that was moved from the stock market in a particular period, wink wink, you know what period I'm talking about, was because the market was obviously, basically doesn't matter what you throw at the wall, it's stuck, right? Remember, the market rallied insanely because of the money printing. So those people, once in a bajillion years, of course, could not ignore what was going on, could not ignore it. It was once in a lifetime opportunity. Put some money in the stock market, right? They've made some profit, pull the money out. These people are naturally risk averse, right? So they're not going to rush putting their money into the market, because now those are not the same conditions. Okay, now in fact we have the opposite conditions. These people are risk averse, they like stable and certain. They're not gonna go into a market that just ran hot, far too hot for about 6 months, and by most evaluations and evaluators is far too hot. So it doesn't make sense. This same money, by the way, I'm not even going to talk about the amount of money that they're saying that is sitting on the sidelines, right? And look, at the end of the day, and I will say this, guys, you can ask me about this in the community, how like there's some disagreements and all that, but it doesn't matter. That's not the point being. The bottom line is, when there's a very smart quote Tom and I keep on repeating, of course, citing Baron Rothschild: buy, buy, buy when the blood is in the street. A lot of people like to quote half of the quote. I don't know why. The entire quote goes: buy, buy, buy when the blood is in the street, even if the blood is your own. In other words, don't focus on your bleeding portfolio. This is why the rich get richer. This is why the account managers get wealthier and get their clientele more healthy, because they have the endurance, because they have the ammunition, the dry powder, the extra cash to put when the market drops. It's a very important facet of investing. Just investing. You know what? Not just trading, right? I mean, just for that, it's tremendously important. And like Tom says, DCA, DCA, DCA when times are tough. But with that in mind, do not try to catch a falling knife. That never ends well. Notice, guys, whenever the market bottoms, then it dwells at the bottom for a while, right? And you're sitting there out of money, and like, damn it, I wish I had money to buy more, right? You already know that when it bottoms out, it's going to be very clear that it bottomed out, or at least reached a certain threshold, right? A stepping stone that is rather low. Don't try to catch a falling knife, okay? And listen to Tom. In the time being, what you can do is actually sign up for Tom's Academy, sign up for my Academy, learn, 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 learn. Why? Because a lot of people end up burning a lot of money, either learning from idiots and buffoons and donkeys, and like a great YouTuber says all the time, love you, that they insist on learning either from people who don't know what they're talking about, obviously, or they don't execute the right strategies at the right time, and end up burning through so much more money that they will spend. We offer our courses at chump change prices. Why? Because we want you guys to succeed. And compared to other people, the amount of knowledge you learn, and honestly, I highly recommend. And you know what? F it. You're saying you're biased, you want to make money. Know what? Don't learn from me. Find somebody you trust, somebody you know who knows that what they're talking about. You know that they know what they're talking about. An actual expert, proper, that you can rely on, and learn from them. As expensive as it may be. I don't like shorting. The only form of shorting I do is I own a whole bunch of SQQQ. In fact, 1,500 of it. Because it's indirect shorting, and it exactly thrives in these particular situations. And it's not to hold it forever. It's an insurance tool. You buy at the right time, execute at the right time, and the time being while you hold it, it actually pays you dividends. Meaning, well, in the US, I know we found that through Tim, legend Tim Titan, our head admin in the community, in the Discord, the one and only great legend. We discovered that in the US, you guys have time decay commission, if you will. You will time decay, which is something you get on options. And here in Israel, you basically, I'm from Israel, those who don't know, we pay commission. So it's a bit different. Make sure with your brokerage how your system works. So, in fact, I was rather surprised that you guys pay time decay for it rather than a commission. All in all, if you own enough of it, the dividend will pay for itself, especially in better times. But then again, you're not in it for that. So yeah, expanding, I hope that answered your question. So I don't short directly, but I do own an asset that appreciates when the market is going down. That way, it's not me against the market. It's more like I join an army that is, if need be, will go against the market, so to speak. And more so, I'll let you in on a little secret. This is not an asset that most retail traders are familiar with, right? And well, it was expensive at times. It had splits and all sorts of things. It's quite a unique asset. So who do you think owns it? These same institutions who claim you shouldn't own it? Okay, okay, interesting. Again, it's not something, unless, look, if you already have a stable portfolio, it's only something you get as an insurance policy. And again, you need to know when the right time when to get it, when to get rid of it as well. It's not just, you know, own and hold kind of thing, okay? Unless, well, it depends what you're trying to do, really. All right, that's good. Any other questions, ladies and gents? Because I'm gonna sign off soon, real soon, like in minutes, if there will be no questions. I really love the people who have on Discord, and I keep on posting that they should join and listen and all that. They don't join, and then every other day they're surprised. Oh, how did that happen? Who could have known? You know? Don't, those who want to sign up for the one-on-one academy with me for the TA, don't sign up for my Patreon because it's separate. And if you do sign up for the academy, you basically get the same privileges as the Patreon. So yeah, don't sign up on Patreon if you plan to sign up to the academy. All right, I guess no questions. No questions going once. No questions going twice. No question going thrice. No questions going 4 times. And no questions going 5 times. Come on, ladies and gents. No questions? All right. My pleasure, Midwest. I hope you enjoyed this. I hope you were able to, learn something or whatever you got from this, or at least, some entertainment or whatever. Although I'm not that entertaining, Arlen says. All right. No questions then. Ladies and gents, thank you very much for joining the live. I hope I was able to contribute something to you. You have a wonderful weekend, and I believe I'll see you on Monday because I don't think I'm going to make any videos on Saturday and Sunday. There's no reason to do that. I don't think we'll have any. I mean, there's no technicals to analyze. I might do a video on my individual channel for my members and such, but nothing, nothing crazy that everybody needs to be super excited about. Ladies and gents, love you much. See you on the next stream. Bye bye.